Good evening. It's Friday, September 16, 7:05 p.m. Welcome to the Mark Yu and Wowie show. Good evening to you, Wowie.
Good evening, Mark. How are you?
Good. How about yourself, sir?
Pretty good. Pretty good.
Yeah, what a crazy day. For listeners, to be fair, we did a recording last night, but due to technical difficulties, we weren't able to publish it. Nonetheless, would you agree, Wowie, that it's all about the same as of today? It's just that we are lower than where we were yesterday.
Yes,
Yeah,
it's on a downtrend this week.
been a crazy, crazy day. Well, we could have foreseen it already, Wowie, right? Because we've been looking at FedEx results yesterday afternoon when it delivered a surprisingly weak guidance and saying some things that investors didn't want to hear. Most of us think that we already found the bottom last June, but according to FedEx, we're down for more trouble in the near future.
It's more than a double. It's more than a triple. It's probably a quadruple whammy that's gonna hit us.
Yeah, and also yesterday we were taking a look at some charts, and I myself and Wowie are not really into drawing charts, but yesterday Wall Street survey came out, and they thought that once we break the 3,900 level, the stock market would even sell off further, which we actually hit right at the open. As of the open, we were down. We already pierced through the 3,900 mark. We opened at 3880, and then we never recovered from there.
Mhm.
So yeah, well, off we go to our weekly sentiment survey of the stock market. We usually start with the American Association of Individual Investors. So they take surveys of investors on a weekly basis. Bullish meaning they think that the stock market will go up. Bearish going down. Neutral, obviously, that you know what that means. So as of September 14th, investors actually turned more bullish from the low teens that we have seen back in July. We skyrocketed by 8 percentage points to 26. Meanwhile, the bearish investors have decreased from 53 to 46. Nonetheless, those people who probably have poured their money in the stock market within the past week are now licking their wounds because and there is no way you would have made any money within the past 5 days. Would you agree, Wawi?
Yeah, I don't think so. It'll be hard.
Unless you probably shorted the market. But if you turned bullish and it poured money in, along with these folks that turned out bullish in the past 5 days, you are losing money. I bet on that. Well, I'm not cheering on that, but I mean, me and Wawi have been, doing this podcast since May of last year, and boy, we were in a ride. Last year was like every single day we've been seeing all time record highs. And since the start of this year, it's been all time, I mean, not all time lows, but it's been falling, falling, and falling with
It's
no,
getting there. It's getting there.
yeah. So if we're going to jump on the volatility index for the past week, volatility is definitely up 12.51%, meaning that the whole S&P 500 is down. So it's been rocky. Yesterday we were down by some 3 percentage points, but Friday week today we're now down 4.46% for the past 5 days. What a way to go down! The volatility for Nasdaq, the tech-heavy index. If you're invested in Google, Amazon, and the tech companies in the world, you are exposed, and the volatility in the Nasdaq also went up by 9%. Not as much as volatility of the S&P 500, but it just shows like if you're gonna look at the Nasdaq Composite, it's down 5.1%, even more than the S&P 500 with a lot less volatility. It just means that the tech-heavy Nasdaq has been going down ever since for longest term, or within since the start of the year. And if we're gonna refresh our industry lookout, we're taking a look at each and every sector of the stock market. Each and every sector is down for the past week, for the past 5 days. Even oil, energy, even there's war in Ukraine and Russia, even there's unforeseen OPEC cuts. Oil is down, energy is down 2.8% for the past 5 days. Uh, Basic materials and communication, and of course, technology are the worst performing sectors for the past week. No industry is up within the past 4 weeks. So, if you're a stock market investor for the past month, you've definitely suffered a sell off in your portfolio.
But giving a little bit of perspective here, for today, there's a slight edge on real estate and consumer staples.
Mhm.
Those are the two green spots on the sectors of the market.
Yeah. All right. So on to the next, the fear and greed index. Obviously, we're back in fear, although for the past 5 days, there are more AAII investors, Association of Individual Investors, jumping on the bullish camp. There's still more fear as we personally experience. Right now, we're at 36 compared to a past week of 44, and just within the past 4 months, past 4 weeks or the past month, we were actually in greed, 67. Now it's almost half of that in terms of sentiment. The market momentum is definitely back in the bearish market. All hail the bears. All the bears are cheering right now, making money, seeing other people suffer in terms of their bullish long-term bets in the market. We're definitely down the 125-day moving average, or about 4-month average. The stock price breadth is still elevated. The McClellan volume, which means this sell-off has some weight to it. People are definitely selling off in the strength, thinking that they're saving money by exiting the market, thinking that they would lessen their losses or exposure in the stock market. But once you sell those shares, it's gonna be hard to go in because you have to time. You have to feel like, oh, this is must be the bottom every now and then. And what if you have missed the bottom? And that's the greatest fear. So put in call options. Look at this while we were back again into September highs for put in call options. Also seen back in May. So people buying some options contract to prevent further downside to their portfolio. So put options, for those who are not aware, these are like contracts that can actually try to guard you from any sell-off. So this is definitely in demand at this point in time. The higher that this graph goes, the more people are buying protection for their overall portfolio.
Well, I'm going to interject a little bit of historical performance of the sectors across the business cycle. If we're fearing recession, just don't forget historically, consumer discretionary, consumer staples, healthcare, and utilities do better during recessions.
And just published as of yesterday, Larry Summers, the former Treasury chief, says that the Federal Reserve, has to raise rates above 4.3% to curb inflation. So we actually came out with a reading on this Wednesday, that marked the sell-off of this week. Wednesday, we suffered the worst sell-off since June of 2020. This was during the time that there was no vaccine and lockdowns are happening each and every corner of the world. So come to think of that, that's a really like terrible upset if you're thinking that the market has already bottomed. Or at this point in time, I don't think we have, because of the market reaction.
Yeah, that's true.
So
And on the 21st, during the 2-day meeting, we will hear back from the chairman of the Federal Reserve, and we will find out what their position is on the rate hikes.
Yeah.
At this point, inflation is pegged at 8.26%.
Mhm. So I think it's on 2021, right? 21st or next Wednesday when the Federal Reserve would come out with their Fed another rate hike. So
Yes.
in my recollection, my short-term memory would tell me that right after the previous Wednesday rate hikes, the market loved it. Market rallied, and then come Thursday, sell off. So don't be deceived if the market starts bouncing up right after the announcement. As me and Huawei would get back online and publish our new episode next week by Thursday or Friday. So don't be surprised if the market rallies because of another Fed rate hike, which is contradictory. But don't be surprised if the market takes all of that back and then some more the following day.
Yes, I won't be surprised if it happens again.
So Ray Dalio, Bridgewater founder and investment officer, one of the billionaires running hedge funds, says watch out for rates reaching this level because Wall Street stocks will take a 20% hit. So we're about to see another sell-off. This was published yesterday, according to Ray Dalio. So he thinks that the Federal Reserve needs to hike more rates. He says, I estimate that a rise in rates from where they are about 4.5%, which the former Treasury Larry Summers is thinking that the Federal Reserve should do, would result into 20% negative impact on equity prices. So I don't know. We need to read the tea leaves here. The guy runs a hedge fund. So as a hedge fund, they cannot just be just long the market. They probably is short the market as well. So it's
Yes.
either they're trying to pad more of their profitable result as of this time, seeing earning more money because of the sell-off, or maybe he's honest, just like Scott Minerd of Guggenheim Partners last week that me and Huawei discussed, that he thinks that if the market, the S&P 500 valuation adjusts to where it should be valued in terms of its PE, we are supposed to see a 20% drop. And he provided a time frame by mid-October, right, Huawei?
Yes, yes, that's what we discussed last time.
So mid-October is just a month from now. So it's coming up close.
So it depends on who you're getting your insights from. If you're getting it from your exchanges, they will tell you to hang on to your holdings and make no adjustments. But as an investor, as a rational investor, you should take profit once it reaches your target. That's just my say on that.
Mhm. Well, in my case, I've been holding on to them, yeah, and haven't had really added so much at this point in time. But yeah, it's becoming to look attractive again. So we'll see. Come next paycheck, will I utilize it? We'll share it here.
I actually, in the same boat as you are, I am increasing my inflow on my tax advantage and taxed portfolios.
Mhm.
So I am adding about another $200 to my tax portfolio every pay period
That's
be-
cool.
because
Dis-
of the downtrend.
yeah, discipline is key, as one might say, right, Maui? That's
Yeah, yeah. And that's
adapt,
what we've learned over time.
yep, adapting to your investment philosophy, sticking to it. As long as you have conviction in the companies you have bought, I think you'll be fine, regardless of trepidation in the market. There's some good news that came out yesterday morning that the railroad workers struck a labor agreement with the union and its employers. So initially, railroad stocks like Union Pacific and Norfolk Southern rose slightly, but all of that gains are wiped out as of now. Just basically take a look at FedEx, down 21%, its biggest drop, if I'm not mistaken, in past 40 years, according to Bloomberg. So FedEx has definitely suffered quite a bit. And I think UPS is down about 5% today. So nothing was spared except for what Huawei had mentioned. Was it healthcare sector that was spared today?
Consumer staples and a little bit like 0.02 on the real estate sector.
Mhm. Real estate. I think that's because store capital, our rate is being engaging in some takeover. Right, Huawei? I don't follow that sector very much.
Yeah, so it's being acquired by another company.
Hmm.
So Store Capital is one of the real estate investment trust,
Hmm.
and
Uh-huh.
it bode well. A few days ago, it went up 20% because of the news.
Yeah, precision. Huh. Well, next topic we have here is from Bloomberg. World Bank says global recession looms amid broadest rate hikes in 5 decades. 50 years. This is the year that we are seeing a lot of rate hikes globally, not just in the United States. So, as we could tell, a lot of the foreign currencies are now in their lowest in not just a year or two. British pound itself, one of the strongest foreign currency out there, is at its lowest against the dollar in the past 37 years. Um, Japan yen is down more than it's in its recent 20 years. So a lot of currencies are weakening. Yours truly, we're looking at, we've been always monitoring the Philippine peso. I think we're at the 58 peso mark, if I'm not mistaken. Let me pull that up. Yeah, 57.35 is to $1. I don't know why the host and Bloomberg said it were close to 58 pesos. But yeah, we're seeing definitely a broad weakening among among not just the first world countries, but all throughout the world.
And that tailwind may be may be continuing for the US dollar because of how aggressive the Fed uh, is hiking their rates. And if they are successful in managing this inflation, there might be a surge in the US dollar, when that happens.
Yeah,
At this time, the US dollar index is at 109.64 when compared to its trading partners.
yep, definitely still trending up, right, Wawi?
It's a little bit down today at 0.09, but for the year, I think it's up like 14 to 15%.
Yeah, because of that, in addition to the Federal Reserve even hiking more rates, people are turning into cash. I just remembered the fund manager survey provided by the Bank of America also revealed that among the fund managers holding, leading these multi-billion dollar funds, the cash allocation has been like on the one of the highest, if not mistaken, within the past 5 years. So, excluding the COVID pandemic back in 2020. So, people are definitely getting more bearish. People are selling stocks, people selling bonds. They're sticking with cash. So that's what's up. More demand for the US dollar, safe haven status, and so more power to the US dollar, sinking more, indirectly affecting the stock market. And I think Adobe also, like some of the companies are now starting to mention that in their reports that the strong dollar is affecting their foreign currency exchange, therefore impacting their profitability.
Mhm.
So commodity wise, Wabi, right? We've been losing grip even with the best performing sector since the start of the year. Not anymore. It's slowing. It's turning negative at each and every occasion.
Yes.
So oil is now down for its third straight week, and I think I mentioned last on our last podcast that we were in a quite a huge sell off for the past 3 years compared to the past 3 years in the oil commodity sector. So despite that, the CPI reported that there's still inflation. Like we delivered 0.1% compared to the expectations of negative inflationary numbers. That's why it led to to the stock market correcting or even dropping even lower. 5% in the past 5 days. I think we're back in the bear. Where I think we're back in the sell-off mode, Wowie.
Yeah, so there is a lot of cash for sure. And if you look at lending banks with the recent release of their assets and liabilities today, there's not a lot of changes to their money holdings.
Hmm.
So it's just like everything is on standby at this point.
Sure.
Even the number of their mortgage-backed securities that they're holding, it's still the same for the past 3 months. There's a slight uptick on um, real estate loans on these banks for the month of August.
Mhm.
So we'll see. Uh, we'll see how it goes. So I think the banks are still lending, so that's good. We still have a good working market as far as that is concerned
Yeah. Banks are still functioning, at least at this time.
at
Um,
this time.
Goldman Sachs announcing laying off employees. I think early this week, right? Wowie? They're gonna let go some employees in their mortgage division and some other financing
Yes.
activities. So there's some slowdown already being felt in the big Wall Street banks, deep pocketed banks. So
Mhm.
Nasdaq has just hit its worst week in past 8 months. So man, we've been just suffering and suffering at this point of time,
Mhm.
staying bullish in the market. But you know, we
Yeah,
just have to hold
Nasdaq is
on to
very sensitive to rate hikes. So this is, if you look at it on the other side, it's a good opportunity to uh, to put money on your conviction stocks
it. Hmm.
because of the downtrend. Um, there's a likelihood of further downtrend because of the aggressive rate hikes. So, you know, I'm not saying you time the market, but if if you are, if you see that downtrend, if you know that that company that you're invested in is in a good position with good earnings, good cash flow, and good market,
Yeah,
then you probably, will profit from it.
that reminds me of Adobe again, right? Huawei, they're buying a startup called Figma for $20 billion. They're spending
Mhm.
$20 billion on a company that generated $2 billion in revenue. So they're paying five, 20, 10 times the sales. Well, should it go to 4 billion as projected? So they're paying 5 times their sales. So, according to an interview I heard, I think Adobe chief CEO said that they're seeing free cash flow on this company, but $20 billion, is this the real? Because right after they announced this, Huawei yesterday, right, the stock of Adobe fell
Mhm.
nearly 20%. So I don't think Wall Street loves this trade. Adobe, I checked last time I checked. I think they only have like less than 5 billion in cash and about 5 billion in debt. So where are they gonna get the remaining $15 billion? Probably from loaning, corporate loan. So this
Mhm.
is gonna end up costing them a lot of like interest payments down the road should it not pan out. And yeah, we just hope, because I think I have a little bit some Adobe shares in my portfolio, and I just hope as a shareholder that hopefully Figma is like an Instagram back in the day or something like YouTube, because if not 20 billion to write off and you generating I mean Adobe is a cash cow. That's why I like the stock. So all hands on deck for sure if this doesn't turn out as what they planned it to be.
Yeah, so I don't know what they're investing in with Figma. So
Mm.
um, I just don't know what the platform is. So probably need to do some research on that.
Right. Oh, and also in looking at some low performing stocks like one's high flyers. If you guys are interested, take a look at Facebook or now the Meta platforms or Meta. It's now at its lowest since the lockdown and COVID. So imagine the drop that it had one back in the day during the lockdown days. So I'm gonna pull up the chart right now from Google. So right now it's $146 a share. If I'm gonna put 5-year range, hopefully my internet cooperates with me. It takes a little bit of time. Yep, we are seeing right now it's even lower than the March lockdown. Oh my gosh, this company is just blown out of proportion. It's as if they filed for bankruptcy. So I'm not saying you guys go all in on this Meta platforms because I think Mark Zuckerberg overplayed his hand and stuck his head deep under the sand of the multiverse and now suffering the most, causing us investors um, big money or at least paper losses at this point in time.
Mhm. Well, I just found out what Figma is used for. It's for sharing projects, files, pages, and frames with anyone that has permission. So this is a document sharing platform, and they also use it for bug tracking tools and community software, and works with Confluence or SharePoint.
Ooh,
So
I see. I hear a lot of jargons. Wow. I don't pick it up so I don't pick up so much in terms of technology, but the CEO of Adobe deserves to be fired. Should this not work for sure?
yeah, a big capital expenditure, of course.
$20 billion.
Yep.
Well, I think that does it for today's episode. I hope you guys, our listeners, who have been loyal and learning stuff together along with us, enjoy our short episode this week. Don't worry, while we strive to record once a week as we can. We consider this as passion. So, well, just don't consider this as investment advice. We tend to just loudly share our thoughts over via YouTube and Google Podcasts. So,
Yes.
if anything else, we thank you for your time this evening, sir.
Yeah. Thank you too, Mark.
All right. I hope you guys had a good week. All right, our Zoom meeting will end in a little bit. So you guys have a good weekend. Thank you guys so much. This is Mark Hughes signing out.
Wawi Santos signing out.